G'day Pella. So I wanted to respond to this by video. This is another tax video. I recorded one earlier today that you might get some valuable context from, but let me cover this off. Brother, if I'm trying to make money but being taxed at nearly 48%, so half my wage, how do you build wealth for yourself? Now, I want to clear a couple of things up because I think there's a couple of things that need to be adjusted in terms of your expectations if you're going to stand a chance at being able to build wealth. Now, in interest of full disclosure, I am in the top marginal tax rate as well. But I also acknowledge that I can use the tax tables to my advantage. And if I understand how to make my numbers work for me, and we do this for all of our clients, that you can build an immense amount of wealth even if you are in the top marginal tax rate and on the assumption that you are losing half your money in tax, which you actually aren't. So let me flip the camera around and show you some numbers. Okay, so for the 24-25 financial year, these are basically the tax tables. We have a progressive tax system that works on tiers. So for individuals that are earning between 0 and 18,200, they pay no tax. From people paying $18,201 to $45,000, they pay 16 cents for every dollar over that 18,000. Then from 45,000 to 135, they pay the flat rate of $4,288, which is basically the 16 cents for this first bracket, plus 30 cents for every dollar over 45. Then for those who are between 135 and 190, they pay 31,000, which is the 16 cents for this part, the 30 cents for this part, and then anything above that, they pay 37 cents for every dollar over 135. And then for $190,000 and over, they pay 51,638, which is the 16 cents for this, the 30 cents for this, the 37 cents for this, and then anything over, they pay 45 cents tax in the dollar. Now, when we actually crunch all of that, the vast majority of people, even in the top marginal tax rate, typically only end up paying about 30% tax. Let me show you an example. So I just jumped onto a website that's called paycalculator.com.au. It's a free site, it's really cool, and you can jump in here and chuck in anything you like. So in this particular example, I've put in a $300,000 annual salary. And on the current tax tables, it's basically summarized that out of $300,000, my net income would be $192,000. I would pay $107,000 in tax, and that is broken down into $101,000 of income tax and $6,000 in Medicare levy. So it's essentially about 33% or thereabouts. Now, here's another example. If you were earning $1 million a year in personal income, even in that particular example, you still end up with $563,000 of net income. You would pay $436,000 in tax. So you still get the bigger share, although it is pretty close to 50-50. Now, what are you going to do with that? Okay, well, you can say, I'm going to earn less money. I'm going to trade in earning $300,000 or $1 million a year to earning $300,000 a year so I can teach that pesky government for taking my money. Or you can earn as much money as you possibly can and then work on the surplus. So in this particular case of $1 million in income, you've got $563,000 of disposable income that you can utilize to live your life and to create surplus and then commit that surplus to work for you. Well, the third option is that where possible, you can leverage tax structures in order to achieve what we call an arbitrage that allows you to minimize your effective tax rate by using those tax structures. Now, if you're an employee, it's not going to help you. There is a little rule that's called PSI that is going to bite you and essentially mean that you're going to end up having to pay the same amount of tax. But if you're a business owner and you are conducting a business and it's not just trading your time for money, that you can leverage trusts and companies in order to bring your effective tax rate in most cases down to about 25%. So typically on my personal income, I pay marginal tax rate and I typically distribute myself out about 300 grand. However, all of my profits above and beyond that, I keep at my company level and I go and invest it in my various group structures at 25% tax, as opposed to distributing it out and then losing another kind of 15 or 20% in tax just for the sake of having it in my own name. I use structures to my advantage. Now, let's assume that you can't do any of that and you still have to pay top rating tax. Well, what can we do to build wealth? So this is one of our tools called the Financial Freedom Forecast, and let me run you through how we do these calculations. So let's assume that you are 35 years old, okay? You want to retire at age 60 and you want your wealth to last until you are 100 because you plan not to die early. So you need to be able to fund 40 years of financial freedom, okay? Let's use this last example. If you want to use other numbers, just reply to this and I'm happy to run the scenario. Let's say that you've got net after-tax income of $563,000, and let's say that goes up by 5% a year. And let's say that you have the ability to save 20% of your household income. That's our benchmark for our clients, that we say you need to be able to commit 20% of any net income income that you earn to building wealth. So in this case, it's about $112,000 a year, okay? In this case, we're going to assume that at financial freedom, you're not going to earn any extra income. You're going to retire completely. And in this particular scenario, you're going to need $300,000 a year in order to be financially free, okay? This is typically relative to the amount of income that you earn. For most of our clients, they typically end up surviving on about 70% of what their net income was when they were working, because at that point, they're not going to have kids, they're not going to have debt. We factor that all into the plan. Now, we make some assumptions. Inflation is 3%, let's assume, long term. Growth assets return 9% a year. Defensive assets return 4% a year. Cash returns 2%. And we're assuming that during our accumulation phase, we're putting 70% of our portfolio into growth, 30% into defensive, and then when we retire, we take less risk, 50% into growth, 40% into defensive, and 10% in cash. So we're going to make a 7.5% return, or after inflation, we're going to make, and in retirement, 6.3, and then after inflation, it's 4.4 and 3.2. And let's assume that you've got $1 million in investment assets now, and we're not going to sell any businesses or anything at retirement, okay? Now, in this particular case, to be financially free, you need $14.5 million at age 60. And in this particular scenario that we've got, in these various scenarios that we've run, then we're going to be financially free. Now, if you can't save this, let's assume that you can only save 10%, then you're not going to hit the goal because you're going to fall short. In this particular case, your wealth is going to run out by the time that you're 90, which isn't too bad. It's better than a kick up the ass, but this is the idea of financial planning. Now, you can be a victim of your situation and whinge and complain about how the government uses your money and how the causes they distribute that to, but you're only cutting off your nose to spite your face. Now, you can be passionate about causes like what's happening in Ukraine and all of these other geopolitical issues and humanitarian issues that are happening globally. But your best choice is to get as wealthy as you possibly can so you can actually contribute money and put your money where your mouth is to try and influence those issues with the wealth that you've got. Because when you're poor, you can't do anything, okay? So you can be really against tax and you will not build any wealth because the only way for you to minimize tax is to break the law or not earn any money, okay? And irrespective of your marginal tax rate, those are the rules. You can kick and scream all of you like, and it's not going to change anything. You need to work within the rules and understand them and bend them to your will to allow you to create the lifestyle that you want for you and your family. Because that's what I do and that's what I help my clients do. And it's about crunching numbers like this of understanding what is your net income? What do you need in order to achieve your goals? What is the simplest pathway for you to get there? And what are the things that you can do to optimize your trajectory to creating financial freedom? That's what real wealth accumulators do. They don't whinge, they don't bitch and moan, they look for the simplest and smartest way to get to their goals. So take it or leave it. You're either going to continue to be a victim or you're going to take responsibility for your financial position. You're going to get in your financial driver's seat. You're going to learn how to drive by learning the rules, and you're going to get on the fast track to creating that life that you want. If you need any help, feel free to let me know in the comments or feel free to contact me in the DMs. Catch you soon.